Hi everyone. Today we're going to be learning an important document called the income statement. It's critical for every business to have an income statement because it shows you how profitable your business was over a given period of time. It shows you how much revenue earned after your taxes, after your staff's payments have been made, after your food costs and your beverage costs and everything has been done. It shows you how much net income you have in your hand. And hence sometimes it's also called the net income statement. Okay? This is a really important document in finance terms of your restaurant. It actually goes along with your balance sheet and your cash flow statement, and managers and business operators can actually look at this document and understand how profitable the business actually is. For the purpose of this exercise, you have been given certain numbers to work with. You have been given the food sales, the beverage sales, the food cost, beverage cost, salaries, wages, employee benefits, everybody wants benefits, other controllable expenses, occupancy costs, interest, and depreciation. So we're going to use all these numbers and then find out our food cost, labor cost, overhead cost, calculate the prime cost, which is very important, and then create a summary of all the cost to sales ratios by adding all the costs together and arriving at 100%. So let's get in there. So you have the sheet along with you. Now, we know our food sales. We have it. The food sales is 1,130,874. So fill in that data over here. I know my beverage sales. I got the beverage sales from here. The next thing that I'm going to work on is my total sales. Total sales is equal to food sales plus beverage sales. To make things simpler, what I recommend you to do is to put in small alphabets near every step of the way. So if food sales is A and beverage sales is B, total sales is C, which is equal to A plus B. And that total comes to 1616174. We now have our food cost. We know what it is. We're going to call this D. We call this E. We call this F. We know our cost of sales for food, which is basically food cost. We have the number right here. So let's populate it. 382,337. And we know our beverage sales right here. Okay, so the total cost of sales will be equal to your food cost plus your beverage cost, which is equal to D plus E. And when we add these two numbers over here together, we get 485,792. Now, how much is our gross profit? Gross profit, let's call this G. Gross profit G is equal to your total sales minus your total costs. That's how you get a profit, which is C minus F. So when you do this deduction, which is basically this number here, you have 1,130,382. Now what this means is, when I opened my restaurant and I made all my sales for the day, I got this amount with me. After that, I had to remove my food costs and my beverage costs, and now this is the amount that I have left with me. And that's why it's called my gross profit. But that's not about it. Remember, everybody wants a piece of the pie. Okay, so you managed to pay off all the costs, but now you have other kind of expenses which are not built into the costs, which are controllable expenses, which are your salaries and wages, employee benefits, and then you have non-controllable expenses as well. So let's start filling in those numbers now. So we're working on the controllable expenses, and we'll call the salaries and wages H, employee benefits I, and other controllable expenses J. I'm just continuing with the sequence that's in front of me over here. So salaries and wages, we have the salaries and wages. It's 397,641. We know the employee benefits, which is I, which is 99,236. And other controllable expenses 295,230. Is J. So the total controllable expenses K is equal to salaries and wages plus employee benefits plus other controllable expenses. When you sum up all these three numbers together, it will come up to 792,107. Okay, so now that's another major piece of the pie which needs to go. So since we had only this much piece of the pie left, we now have to minus this amount, which is your total controllable expenses. So to do that, we will put in the formula for income before occupancy costs, which is, we call this L, which is equal to G minus K, which is basically income before occupancy costs is your gross profit minus your controllable expenses. And now you're left with 338,275. Your piece of the pie is becoming smaller. Okay, but now you have your occupancy costs, you've got your interest, depreciation, and your total cost. And the total of all of that. So let's again give them alphabets to work with. So we call this M, N, O, P. Okay, so let's put in the numbers. We know the occupancy cost from the legend above. We have it. It's 85,230. We know the interest. It's available in the legend above. Is 27,800. And we know the depreciation number as well from above, which is 79,099. Okay, so P, which is your total, is equal to M plus N plus O, which is equal to 192,129. It's basically a summary of all of this. Again, we need to understand our restaurant's profit. So we need to minus everything. So after we gave away our salaries to our staff and paid off their benefits, we were left with this piece of the pie. And now finally, we're going to minus this amount from this total and understand what our profit will be. So let's call the restaurant profit Q, which is equal to basically the income before occupancy costs, interest, depreciation, income tax, which is L minus my total that I just received, which is P. So when I do this calculation, I'm left with 146, 146. I like that number. So in this way, you manage to fill up your income statement. So this was a total income that you received earlier. I'll use a different color. So this was the amount that we received earlier when we sold our food items and beverage items in the restaurant, and customers pay you money. At the end of the day, you collect all of that and you accumulate it with your total sales. Then you have to pay off all your suppliers for all the raw material that they gave you. And if this was the full piece of the pie, now somebody has taken a piece of the pie and your piece has become a little less. And then after that, you had to pay your employee benefits. They're not going to work for you for free. So you minus the total cost over there, and now you're left with a lot less of the pie. And then after that, you have to remove your occupancy costs and interest and depreciation, which happens in the restaurant. And finally, from that piece, you're left with about this much of the pie. And that becomes your restaurant profit. Okay, now let's see in a percentage form how all of this translates into. So moving on to the next exercise now. So we're going to remove the food cost percentage. Food cost percentage is equal to your food cost divided by your food sales into 100. So we know our food cost. We have our food cost information given to us. So let's call this R. We'll call this number R, this alphabet R for now. Okay, and we know our food cost. Our food cost is basically right up over here. Right, this is your food cost, which is 382,337 D. So I'm going to say this is basically D divided by total sales. We have total sales on top, which is denoted by the number alphabet A, and we multiply that into 100. So if you had to put the numbers in, so 382,337 divided by 1130874 into 100. So let's do that calculation. Okay. So to calculate this, we're going to put it in a percentage form. So we're going to do that. So 382,337 divided by 1130874, which is equal to this number. Now remember, we want a percentage. If you have to use an index value, then you have to use it in a decimal form. If you want to use a percentage value, you need to translate it into a percentage. To convert this into a percentage, what we're going to do is just multiply it by 100. And now we know our calculation, which is 33.808. So I'm going to round it up to 81. So anything that is above, that goes above 5. If it was 803, I would have left it at 0.80, but because it's 0.808, I'm going to round it up to 81. All right. And just going to go back into my sheet over here. Okay. So we populate that number over here. Sorry. That was not supposed to happen. Okay, so we can populate that number here, which is 33.81%. Now we have our food cost percentage. Now let's calculate our beverage cost percentage. So the beverage cost percentage is equal to the beverage cost divided by the beverage sales into 100. Like we had the food cost, we've also have our beverage cost. The beverage cost is denoted on top earlier as E divided by beverage sales, which was B into 100. Let's put the numbers in. So that's 103 455 divided by 485,300 into 100. So we're dividing this number and multiplying it by 100. And in this case, you should get a number of 21.32 percentage. All right. I'm going to do that calculation again just to get you used to how to calculating percentages. So I wish I could. Oh, there we go. Okay, this works. So we put in the number now. How I got 21.32, so we do 103,455 divided by 485,300, which is equal to 0.2131. Okay. Now again, we have to multiply this by 100 to get into a percentage form. So now we have 21.317. So I'm gonna not use 3 digits. I'm just gonna use the first 2 digits after decimal point, but because it's a 7, I'm gonna round it to a 32 for my calculation purpose. Okay, for some reason this, oh, there we go. Sorry about that. Now we're going to calculate our labor costs. Before we do that, let's tag our beverage cost with an alphabet so it helps us going forward. LMNOPQRS, so that's an S over there for beverage costs, and then labor cost is denoted with the T. And we already know our salaries and wages and employee benefits. We're trying to understand the labor costs, so we'll add up our salaries and wages and employee benefits. So our salaries and wages was denoted by an H, and your employee benefits was denoted by an I. Okay, so let's put the numbers in. These numbers were given to us in the legend above. I'm just using the numbers from there. Okay, I'm going to add these two numbers together to get my total labor cost, which is 496,877. All right, we're looking good. We're now going to remove the labor cost percentage now that we know the total labor cost. So that's LMNOPQRST, and this will be a U, and we'll call this, so the labor cost percentage is equal to labor cost divided by total sales. If you notice, for the food cost and for the beverage cost percentages, we use the beverage sales and the food sales respectively for their calculation. Over here, we're calculating the total sales when we are using when we have to calculate the labor cost percentage. We're going to use the total sales. So that's T divided by C into 100. So let's put in the numbers. So we know our labor cost. Our labor cost we just calculated on top is 496,877, and we know our total sales, which is basically your food sales plus your beverage sales. We calculated that earlier in our income statement, which is 1616174. So what's my labor cost percentage going to be equal to? So my labor cost divided by my total sales into 100. And when you do that, you'll get a calculation of 30.74%. We now know through this entire exercise, we've learned that our food cost is 33.81%. Our beverage cost is 21.32%, and our labor cost is 30.74%. So that was how we calculated exercise 1.1 and 1.2. We're now moving on to exercise 1.3, which is to calculate basically the overheads of our business. So we again have these numbers with us. We know our other controllable expenses. We calculated it earlier. It's been given to us. So let's just again continue the numbering. So labor cost percentage was U. The next alphabet is basically V. Okay. So to calculate the overhead cost, we're going to add up the other controllable expenses, occupancy costs, interest, and depreciation. These are our overhead costs. So we have these numbers with us already. We have this on top as J. We have the occupancy costs located on top as M, interest as N, and depreciation as 0. Oh, so let's put in the numbers. So we're going to sum up all of this together, and we know our total overhead costs is 487,359. Okay, so we know our total overhead costs. To calculate the overhead cost percentage, we take our total overhead cost divided by our total sales into 100. Okay, so our total overhead cost was denoted by V. Our total sales we calculated on top was C, and we just multiply that into 100. Let's put the numbers in. So that's 487,359 divided by 1616174. Your cost percent, and to remove a percentage, don't forget to multiply it by 100. So the cost percentage is now equal to 30.2%. Whew. Let's give this an alphabet too. So that's L, M, N, O, P, Q, R, S, T, U, V, W. I hope I don't run out of alphabets. Let's move to exercise 1.4. We're going to calculate prime cost. Prime cost formula is very simple. Your prime cost is equal to your food cost, your beverage cost, and your labor cost. Overheads are not there in prime cost. Overheads are not a part of prime costs. Food and beverage managers like to know how much their prime costs are, because these are the costs which we can play around with. These are your variable costs, and you can play around with these numbers and reduce your costs. So food and beverage managers generally like to know the prime cost, but they don't like to tell people, tell me the food cost, tell me the beverage cost, tell me the labor cost. They like to summarize it together and just call it the prime cost. So that's why we're going to calculate the prime cost, so that you as a manager know exactly how your business is doing. So the total cost of food and beverage, okay, which is basically food cost plus beverage cost, we had calculated this earlier on top, which was F in our income statement, was 485,792. We know our total labor cost. We just calculated that by T. We had calculated with this, noted it with the symbol T, and we write that as 496,877. So to find the total prime cost, we're going to add up these numbers together, and that's 982,669. Okay, But now we want to know the prime cost percentage. So the prime cost percentage, let's give the prime, sorry, before we move, let's give prime cost a symbol. Let's call it X. Okay. So to calculate prime cost percentage, we'll take the prime cost divided by total sales into 100. So prime cost was denoted by X divided by total sales, which was a C, and we multiply it by 100. Again, remember, overheads are not a part of prime cost. Do not make that mistake of adding your overheads in this calculation. So we put in the numbers. We know from above that X is 982,669. We divide it by 1616174. That was our total sales, C. And now we'll get this in a decimal format. We have to convert it into a percentage, remember. So we'll multiply it by 100, and you should get the number 60.8%. We now know the prime cost. Let's give it an alphabet. We'll call it Y. And we've almost reached the end over here, thankfully, because I'm running out of alphabets. And we want to know our profit percentage. Oops, I didn't put a block over here. There we go. So the profit, let's call it, let's give this an alphabet as well, the last alphabet, which is Z. This is your piece of the pie. This is how much you're going to take home. This is yours after your hard work of opening this business and doing all of these operations. This is what you have. This is you. Enjoy it. All right. Let's know how much we have. So let's call, to do the profit percentage, or to calculate the profit percent, we take our restaurant profit and we divide it by the total sales and we multiply it into 100. Now we know from our earlier calculations what the restaurant profit was. We had it in our income statement in exercise 1.1. There we go. We know our restaurant's profit is 146,146. But if I tell somebody that, oh, I made $146,000 the other day, how do you know if that's actually good or bad? How do you know if that profit was just 1% of your total sales? And that's not a good sign. So percentages speak percentages speak way more than numbers. What if you tell people that, oh, I closed my restaurant with a profit of 15%. I had a profit of 10%. I had a profit of 9%. That makes more sense. That makes sense, and it tells the owner that how much percentage he's actually earned of the pie, and that's what matters to him at the end of the day. Numbers will not give that much of an indication as percentages do, and that's the relation to of the cost to sales ratios. Okay, so let's calculate our profit now. We know the profit from above. We had called it, oops, I'm using, we had called it Q, and we divided by the total sales, which is C, and we multiply it into 100. So let's put the numbers in. So we know from above we had the profit of 146,146 divided by your total sales, which is 1616174. Don't forget to multiply it by 100. We want a percentage. And when you do this calculation, you'll come to know that your business earned a profit of 9%. And 9% is not necessarily bad. In the food and beverage industry, 9% of profit to take home is considered a very, very good sign. 10% is considered a very good sign. 9% is not bad. All right. So we reached the last part of our entire puzzle. Now, the total should always come up to 100. How do we know if we've done our calculations correctly? So we'll start adding up all these percentages that we've got. So we know the prime cost. Prime cost was denoted by a Y. We know the overhead cost was denoted by, oops, sorry, didn't mean to do that, was denoted by a W. And we know the profit percentage right above over here, we know it was a Z. So let's calculate the profit. Let's calculate the total now and see if our calculations are correct. So we'll first find the Y. The Y is 60.8%. Overheads, which was denoted by a W, is 30. There we have the overheads, which is 30.2. Sorry, forgot to change the color of the pen. We know this is 30.2%, and our profit right here is 9%. When you add up all of this, it has to come up to 100%. If you get anything less than 100 or more than 100, your answer is wrong. If you get 100, your answer is absolutely correct. And this is how we calculated our costs by using the income statement. And hence, the income statement is a very important document to understand how much money you're actually going to take home. If I tell someone that I had a profit of $146,000, but my total costs were $140,000, then that's going to leave me with absolutely nothing to work with. And that's not really a good sign. But if I tell someone that I had a 9% profit at the end of the day, and my overheads were at 30%, and my prime cost was at 60%, and I'm trying to work on my prime cost, because if I can somehow reduce my prime costs, let me use a different color so you can see what I'm talking about. If I can somehow reduce my prime costs, maintain my overhead costs if need be, my profit would go up, giving me more money. And that is how we're going to end our income statement exercise. Please try practicing this. You have the documents attached with you. Please try practicing this and feel free to let me know if you have any questions. Thank you.